Hello, and welcome to Crypto Craze, your go-to source for the latest and greatest in cryptocurrency news and education. Buckle up for an intense ride as we take you on a journey through a content-packed video that is not to be missed. So please hit the like button, subscribe to the channel, and turn on post notifications. For our first story of the day, it seems like the biggest brands are hopping on the NFT train, but with a twist. They're no longer calling them NFTs. The latest example comes from Nike, the massive shoe and apparel brand that is dropping its first digital creation collection on Swoosh, their blockchain-powered platform. Really quick, guys, it's worth noting that I am not a certified financial or investment advisor by profession. Please understand that this video should not be taken as financial or investment advice, though this likely comes as no surprise to you. But don't let the name fool you. These digital images of virtual shoeboxes are essentially NFTs, and what's more, they will unlock various digital versions of Nike's iconic Air Force One sneakers, which were first sold in 1982. That's right, you can now own a piece of sneaker history as an NFT or digital creation. But why are big brands shying away from calling these collectibles what they really are? It could be because of the recent crypto scandals, or perhaps an attempt to make blockchain technology more mainstream by using everyday language. Whatever the reason, savvy investors like you know that these digital creations are still NFTs, and that means they can be a lucrative investment. Nike is giving every one of its more than 330,000 Swoosh members a chance to buy one of the digital boxes for $19.82 each. And if they sell just one box to each member, Nike could generate more than $6.5 million in revenue. That's a huge opportunity for investors looking to get in on the action. But this isn't Nike's first foray into the digital world. Last year, they released NFT sneakers through RTFKT, a digital fashion and collectibles firm owned by the company. And now, with the release of the Air Force One digital creations, Nike is further cementing its place in the world of NFTs. The Air Force One boxes became available on April 18th and could be purchased on Nike's digital marketplace. Don't miss out on the opportunity to own a piece of sneaker history and make a potentially lucrative investment. Keep an eye on these big brands as they continue to explore the world of NFTs and blockchain technology, and remember to always do your research and invest wisely. For our next story of the day, grab your coffee and take a seat, because Starbucks is back at it again with a brand new NFT collection. That's right, the world's largest coffeehouse chain is launching the Starbucks First Store collection on the Polygon network, featuring art that pays homage to the company's first ever location, which opened in Seattle's Pike Place Market in 1971. According to Starbucks, people from all over the map come to see this historic landmark for themselves, experiencing a sense of nostalgia and being part of something bigger. And now, with the Starbucks First Store collection, you too can own a piece of history. But that's not all. There's way more to this collection than just sentimental value. There were recently 5,000 The First Store collection stamps up for grabs, each priced at $100. But here's the kicker. If you already owned 2 or more unique Journey stamps from Starbucks' previous NFT collection, you got early access to the First Store collection. And for everyone else, the general sale began with a limit of 1 stamp per person for all collectors. Now I know what you're thinking. Starbucks? NFTs? What's the catch? Well, let me tell you. This move by the coffee giant comes just one day after another iconic retail brand, Nike, made its push into the world of crypto with its first digital creation collection on its Swoosh blockchain platform. And with more and more big brands jumping on the crypto bandwagon, it's clear that this space is only going to continue to grow and thrive. But Starbucks isn't just dipping its toes in the NFT waters. Back in May 2022, the company announced its plans to launch its own NFT collection to give users access to exclusive content experiences and other benefits. And on an earnings call, Starbucks Chief Marketing Officer Brady Brewer even said, "We are creating the digital third place." That's right, Starbucks is aiming to expand its framework of what it means to be a member of the Starbucks community by adding new concepts such as ownership and community-based membership models that we see developing in the Web3 space. And it doesn't end there. Last September, Starbucks announced Odyssey, an extension of Starbucks Rewards that seeks to expand brand loyalty in the virtual world. And in December, the company launched a beta test of Odyssey, allowing members to participate in interactive journeys like games and virtual tours related to coffee education and Starbucks history, earning Odyssey points that can be exchanged for rewards or Journey Stamp NFTs that can be collected and traded. For our last story of the day, we have some exciting news from Lido Finance, the liquid staking protocol that is making waves in the Ethereum ecosystem. According to DeFi Llama, Lido's total value locked has surpassed 6 million Ether, which translates to more than $12 billion in value. But what exactly is liquid staking, you ask? Well, it's a popular method that allows users to deposit their ETH and receive a derivative token as proof of their deposit. This token can be used as collateral within the DeFi ecosystem, enabling users to earn additional yields beyond what Ethereum staking alone provides. And with the recent Shapella upgrade on the Ethereum network, liquid staking is poised to benefit even more. This upgrade allows for proof-of-stake withdrawals, making it more capital efficient and flexible for traders to earn staking rewards while retaining the ability to move their funds freely. As a result, more and more users are turning to staking providers like Lido over operating their own validator nodes, which can be costly and complex. The costs associated with running a validator node require a minimum stake of 32 Ethereum or $64,000. Liquid staking offers lower requirements below the minimum of 32 Ether, making it more accessible to a wider range of users. Robert Ellison, Chief Growth Officer at Allnodes, a node hosting and staking platform, says that it's likely that some people will transition to liquid staking, in which they control their Ethereum, as it also facilitates lower requirements. This Shapella update opens the door to new markets that have been hesitant to get involved, which supports the network and liquid staking. With Lido commanding a significant position in the liquid staking derivative market, holding approximately 30% of the market share, savvy investors should take note. As the staking landscape evolves and more users turn to liquid staking, Lido and other protocols like it have the potential to generate significant returns for investors. And with Lido's total value locked rising by over 20% since January, this trend is expected to continue well into the future. So, whether you're a seasoned crypto investor or just getting started, keep an eye on Lido and the exciting potential of liquid staking. Make sure to comment down below what video you would like to see next, and hit the like button if you learned something new or found the information useful. Also, please consider subscribing if you like this type of content. That's all for now. Until next time, guys.